Hello, everyone, and welcome to this webinar on the recently published Exposure Draft Management Commentary. I'm Nick Anderson, I'm an ISB board member, and today I'm joined by two members of the Management Commentary team, Matt Chapman and Helena Vola. Just a few housekeeping points before we start. Today we'll provide a brief overview of the proposals in the Exposure Draft. You can find the Exposure Draft itself and its accompanying documents and the slides used in this presentation on the Management Commentary Project webpage. In this webinar, we are presenting our views. They are not necessarily those views of the ISB or the IFRS Foundation. We welcome your questions. So to ask a question during the webinar, type into the designated text box on your screen and then click Submit. You can submit your questions at any time during the presentation, and we're going to try and ask them as we go along, but there'll also be an opportunity at the end of the presentation. So we'll start the session by introducing the project, explaining why the board is doing it, what it's trying to achieve, and how the revised practice statement will be used. We'll then explain the main aspects of the board's proposals. We'll be turning to your questions throughout the session, and we'll finish with a Q&A session. But before we start, Helena this morning. Helena, can you remind everyone, what is the management commentary?
Of course. Good morning, everyone. So management commentary is a report that complements a company's financial statements. So it is typically provided alongside them in a company's annual report. You may know it by various names, for example, management discussion and analysis, strategic or director's report. It is a narrative discussion that provides additional information needed to interpret a company's financial statements, to assess the company's prospects and management stewardship. So management commentary includes a mix of financial and non-financial information on matters that are key to the company's long-term success. So how does management commentary compare with other forms of reporting? Narrative reports, and there are many of them, may be of interest to a range of users, for example, investors, employees, and the general public. The focus of management commentary is on investors' and creditors' information needs, so it will not necessarily meet of those other users. Sustainability reporting is one of the best-known fields of wider corporate reporting, and many companies will be affected by sustainability factors. Where that is the case, management commentary would need to provide information about those matters that is material to investors and creditors, but more on that a little bit later.
So Helena, why is the board doing the project on management commentary, and what is it trying to achieve?
Well, the original management commentary practice statement was issued in 2010, and a lot has happened since then. Firstly, narrative reporting itself has moved on since 2010. Other frameworks have built on the original practice statement that the board issued. So, for example, integrated reporting and national frameworks have developed the ideas of value creation, and they placed much greater emphasis on providing information about a company's resources and relationships that can play such a significant role in determining a company's success. So there is now a good opportunity to consolidate innovations from those frameworks to support a high-quality, globally consistent narrative reporting. Secondly, we know that investor information needs are changing. There is now greater recognition of the importance of long-term prospects in determining the company's enterprise value. And of course, sustainability or ESG factors, as well as intangibles, are important components in that. Thirdly, there are some well-documented gaps in current reporting practice. And throughout this project, we have had concerns over short-term view in management commentaries when reports don't address the drivers of long-term prospects. We also had over lack of focus when the reports touch on the right topics, but they don't provide useful information on them. Also, we had that they can provide a fragmented discussion that tells just one side of the story, and normally it would be focusing on the good news. So we've had that reports are often both too long, but at the same time don't provide enough useful information. So taking all those factors together, an overhaul of the board's management commentary framework was needed to provide a robust basis for meeting global capital markets needs. And what is the board aiming to achieve with the proposals? Well, the aim is to provide a comprehensive framework focused on investors' and creditors' information needs. So the board has been developing such comprehensive, clear and structured framework to provide an effective basis for providing and preparing management commentary. In doing so, the board thought to make this framework flexible enough to allow preparers to tell their unique story. And that story should be centered on the key matters that are fundamental to the company's long-term value. And it should be based on information that management uses to run the business. So as well as to provide this flexibility for preparers, the board also aims to provide a rigorous basis for assessing compliance. This in turn could help regulators to mandate the framework in their jurisdictions. It is also designed to provide an effective basis for auditors to provide external assurance, which could lead to greater trust being placed in information in management commentaries. So in developing its proposals, the board also sought to bring together the latest thinking in narrative reporting and also importantly to address current gaps in practice. One more important consideration for the board has been to develop a framework that could be applied alongside national laws and regulators, as well as alongside other narrative reporting requirements. And the next slide shows how the board sees the role of management commentary. So you can see that the board has designed management commentary to bring together all information types to bring the company's story. So let me explain. Of course, financial information plays an important role in understanding the prospects of the company. But investors and creditors also need sustainability-related information. For example, to understand how the business is managing its environmental impacts that could leave it exposed to regulatory or customer actions. They may also need other information. For example, whether the business is progressing in its target market, or whether it's managing its supply chain exposures, or whether it's managing the relationship it needs to succeed. So a management commentary provides the home for that material, sustainability, and other information. And some of that information may be identified using a sustainability or other industry-specific framework. And many of you will have heard about the IFRS trustees consultation on establishing an international sustainability standards board. So in the future, preparers might be able to apply standards issued by that proposed new board to identify material sustainability-related information for inclusion in management commentary. I also mentioned that the board has designed the proposals so that they could be used alongside local laws and regulations. And to facilitate this, management commentary may include immaterial information required by those national laws and regulations, as long as that information does not obscure material information.
So that's really helpful, particularly understanding how this might interact with local laws and regulations. But do we have a sense who will apply the revised practice statement?
Well, the practice statement was designed so that local lawmakers and regulators could adopt it. As this is a practice statement, companies do not have to prepare management commentary in order to claim compliance with the IFRS standards. So it is down to each country's lawmaker or regulator to decide whether to mandate the practice statement. They can also decide to update local requirements or guidance to integrate some of the board's proposals. And because the board's proposals build on national frameworks, build on innovations, and consolidate the best practice development, we hope that it should be attractive for regulators and lawmakers to do so. Companies themselves may also choose to apply the practice statement. Especially they might decide to do so where they are faced with broadly specified reporting requirements. So for example, the local law might include a requirement to describe a company's business model or strategy, but without guidance on what that description should achieve. In this case, the practice statement can help preparers identify information about the business model or strategy that would be useful to investors and creditors.
Thanks for that, Helena. I think now it'd be interesting to hear what the audience thinks and try and get some audience reactions. So we have a polling question for you. And the first question is around how would you like to see the revised practice statement used? And there are a number of choices in that, which is set as a benchmark for best practice reporting, influence the development of regulatory requirements in my region, be adopted as guidance to help preparers meet regulatory requirements in my region, or replace regulatory requirements in my region. So thank you. We're now starting to receive your views. Let me give you a little bit longer. Great, thank you. So we seem to be really coming around 2 points for this. Around about just 70% of those of you who've responded have told us that this is to set a benchmark for best practice reporting, and then around about 30% to be adopted as guidance to help preparers meet regulatory requirements in my region. So that's very, very interesting, actually. So thanks for those responses. Shall we see if we have any questions that have come in then from the audience? If not, Matt, I might just ask you, one question that we often receive is, how do the board's proposals differ from the integrated reporting framework?
Yes, Nick, you're right. That's a very common question. And of course, we were very grateful to have significant input from someone who is a senior member of the IIRC in developing our proposals through the consultative group. I think integrated reporters would find a lot in management commentary that they would recognise, but not always with the same names and terminology. For example, integrated reporters will refer to the capitals. Understandably, I think for us that would be a problematic term, so we talk about resources and relationships. But I think fundamentally a company producing a good integrated report today would not have much difficulty transitioning to a management commentary if that was what they chose to do.
Great. So is it fair to say, as you highlight, the language isn't always the same, but the key principles, there's probably a high degree of overlap between the practice statement and the key principles within integrated reporting?
Absolutely, Nick. So you'll see references to stakeholders in the exposure draft. When we come to talk about objectives, you'll see references to value creation. I think if you look at the principles, I would be surprised if there was information in an integrated report that wouldn't feature in a management commentary.
Great, thanks for clarifying that, Matt. That's very helpful. And again, just to encourage our audience, if you have questions, please feel free to submit those at any time, and we will do our best to answer those. So I think we should move on to the next section around objectives-based approach that is embedded in the practice statement. So Helena talked about why the board is doing the project, and what the project is aiming to achieve. And now we're going to talk about the how the board is proposing to do this through the practice statement. So Matt, could you please explain the board's overall approach in the project?
Of course, Nick. And as Yelena has just explained, the board set out to develop a framework that is flexible enough to enable preparers to tell their unique story, and at the same time would be robust enough to enable regulatory enforcement and assessments of compliance. So to do that, a management commentary must focus on the key matters that are fundamental to the company's future success. Because these matters are company specific, the board can't provide a prescriptive list of disclosures that must be provided by all companies in all cases. So instead, the board's adopted an objectives-based approach. At a high level, the board is proposing an overarching objective for management commentary that has two components. First is backwards looking, to enhance investors' understanding of the financial performance and position reported in the company's financial statements. The second is forward-looking, to provide insights into the company's ability to create value and generate cash flows in the future, including in the long term. The matters that could affect the company in the future, in other words. Now, to help preparers identify the information needed to achieve this, the board is proposing disclosure objectives for each of the 6 areas of content listed on the right-hand side of the screen. And we'll look at an example of how that works in a minute. The board's also proposing requirements and guidance on selecting and presenting information in a management commentary. For example, whether information is presented in a balanced way and accurately described. And we'll come back to that later in this webinar. So now let's come back to the disclosure objectives for the content areas. And these are the core of the board's proposals. They're designed to provide the basis for preparers to tell their unique stories, whilst also enabling regulators and assurers to assess whether the requirements for a management commentary have been met. Now on the screen, you'll see an example for the business model content area. And a headline objective requires management commentary to include information needed for investors and creditors to understand how the company's business model creates value and generate cash flows. But what does that really mean? Well, the assessment objective goes on to explain the assessments that this information needs to support. For business model, information in a management commentary must be sufficient to support an assessment of how effective the business model is in generating cash flows, how scalable and adaptable it is, and how resilient and durable it is. Then we have the specific objectives. They explain what information would be required to support those assessments. For business model, this information would need to cover the range, nature, and scale of the company's operations, the cycle of creating value and generating cash flows, environmental and social impacts of the company's activities, and progress in managing the company's business model. And progress actually features throughout those content areas. It's a very important aspect of what's being proposed. So it's not enough just to provide some general information about the business model. Preparers would need to step back and think whether they have given enough information to enable investors to make their assessments. So do take a look at Chapter 11 of the exposure draft for an overview of all the disclosure objectives.
So Matt, you use the phrase all of the disclosure objectives, and it may look like the disclosure objectives ask for a lot of information. Is that the intention?
Yeah, good question, Nick. So firstly, let me stress that the information in the management commentary is derived from the information used to manage the business. So no new information would need to be created to prepare a management commentary. Now, the disclosure objectives are designed so that preparers can focus on the information that is key in their circumstances. So information is provided where it is material for investors' assessments of the company's prospects for future cash flows or of management stewardship of the company's resources. And of course, that's the same definition of materiality that is used in the financial statements as well. But we know that making materiality assessments management commentary can be challenging. We heard that throughout the development of the board's proposals. So the board is proposing requirements and guidance to help preparers identify what information needs to be included in management commentary, and equally importantly, what information does not need to be included. So firstly, the board introduced the notion of key matters and the requirement to focus on them. These are the matters that are fundamental to the company's ability to create value and generate cash flows, including in the long term, the matters that a company's valuation would hinge on. So they're likely to be the ones that management is already monitoring and managing. And they're also likely to be pervasive and relate to more than one area of content. So, for example, if a company depends on a particular competitive advantage for its success, business model information would be needed to understand what that competitive advantage is. Resources and relationships information may be needed to understand what that advantage depends on. And the company might also need to discuss what are the risks to that competitive advantage and how it is managing exposure to those risks. Now, in addition to the guidance on key matters, the board is proposing further guidance to address the practical issues preparers face in making materiality judgments. It can be difficult to assess whether information about uncertain future events will be material. This can lead to important information, for example, about the resilience of a company's business model being omitted. So the board's proposing guidance to help preparers apply materiality in these situations. It's also important that information is presented at the right level of detail to be useful. For example, important but diverging trends may not be visible if performance information is over-aggregated. Conversely, too much disaggregation may make it difficult for the reader to identify the important information. So we're proposing guidance to help preparers determine the most appropriate level of aggregation. Now, I talked about key matters being pervasive across the content areas. So information needs to be presented coherently across those content areas so that investors can assess how these matters affect the company's overall ability to create value and generate cash flows. It's back to this idea of telling a story, a coherent story, across the different content areas. For example, it's not enough to know that the business is exposed to a particular risk. An investor would also need to know what parts of the business model were exposed to the risk, a management strategy for managing that exposure. Now, on the screen, you can see how these content areas fit together. Business model is about what the company is doing today, its current ability to create value and generate cash flow. Then strategy is about how management plans to sustain and develop the business model in the future, including in the long term. That is about where the company is heading. Information on the company's key resources and relationships is needed to understand what the company's business model and strategy depend on, and risks address the matters that could disrupt the direction in which the company is going, i.e., what could disrupt its business model, strategy, or access to resources and relationships. Then external environment is about what has affected or could affect each of those areas. Finally, financial performance position is about understanding how all those factors translated into the company's financial statements. And remember, across the areas of content, companies would need to provide financial, sustainability, and other information to meet those disclosure objectives. Now, we're sometimes asked why there is no separate content area for prospects. And as you heard earlier, that's because all of the information in a management commentary is designed to support an assessment of the company's prospects.
Thanks, Matt. We started this section by talking about disclosure objectives, and we've had a question in which relates to the targeted standards level review of disclosures and the relationship between that project and the management commentary practice statement. And the question, let me read it to you. Management commentary practice statement proposes 3 objectives: headline objective, assessment objective, and specific objective, while the pilot approach proposes overall disclosure objectives and specific disclosure objectives. So just really trying to explore, the question's really thinking about trying to explore the relationships between that project around disclosures in the financial statements and how we have set up the objectives within the management commentary practice statement.
Yeah, it's a really good question. And of course, the disclosure initiative project was being developed at the same time as the exposure draft. And I think it was really helpful that the 2 projects is essentially are following the same conceptual track in terms of how the disclosure objectives work. But of course, a management commentary is a little bit different to a company's financial statements. There's much more. There's a much broader range of information that might need to be provided, and the exposure draft can be much less specific about what that information needs to be, because the information is so varied between different companies, even ones in the same industry. So whilst I think it would be fair to say that the management commentary is taking the same approach, some of the detail around that approach needs to be different, and that's reflected in the different wording and headings to the disclosure initiative.
Thanks, Matt. And I guess that the fundamental linkage is that whichever route is, both are seeking to understand users' needs and to express those in terms of the disclosure objectives in totality. So that's very helpful explanation. Now, perhaps some of those listening today would have noticed that we don't have separate areas of content for matters that are increasingly on the investor's radar. And that's issues such as the long-term prospects for a company, intangibles, and sustainability, indeed. But Matt, why is that?
Yeah, good question. And the board was aware how important information about these matters is for investors, and so these were all important considerations throughout the development of the board's proposals. But these matters are pervasive and can affect companies in various ways. So rather than address them in isolation, requirements and guidance for reporting on these matters are provided throughout the exposure draft across each of the content areas. The board provided an appendix summarising how these requirements and guidance might apply to these matters. And that appendix at the back of the exposure draft, I do encourage you to have a look at that, serves as both a tool to help preparers identify topic-specific information that might be required, but it's also intended to set expectations on the scope of information required in a management commentary, because again, throughout the project, the board heard concerns that information on these areas was often lacking or under-focused. Now, today we've only got time to highlight the main aspects of the board's proposals for reporting on these matters. So I'll just briefly run through those, starting with long-term prospects. And first, let me be clear that the proposals do not ask management to make forecasts of future performance, whether that's in the short term or long term. They ask management to provide information to support investor assessments of a company's prospects. However, a large chunk of many company valuations rests on their long-term prospects. So information about factors that would affect an assessment of a company's long-term prospects is important to investors and needs to be provided in a management commentary. Now, as I already mentioned, the framework provides guidance to help preparers determine whether information about uncertain future events might be material. And you'll also see that the disclosure objectives recognise the importance of this type of information. For example, looking back to a business model, information about the company's business model needs to be sufficient to support an assessment of its resilience and its durability. Now, turning to intangibles, you'll have seen that we have a content area to address the company's resources and relationships. And of course, many of these will be intangible. For example, the customer base, know-how, key distributor relationships, or reputation. The proposals ask for information about the company's key resources and relationships. So, for example, an engineering business might need to provide information on its retention of a business critical design team, but it might not need to provide information about workforce retention as a whole. That needs to be a company-specific judgment. Finally, I'll turn to sustainability matters. And again, you won't find a separate sustainability section in our proposals because these matters are pervasive and can affect a company in many different ways. However, if a sustainability matter is fundamental to a company's future prospects, it would need to be addressed across the content areas of the management commentary. And just to flag here that management will be able to use sustainability-related reporting frameworks issued by other organisations to help them identify information that might be material for a management commentary. I hope that answers your question, Nick.
Yeah, that's great, Matt. And we're just going to pause now for another polling question, if we could have that up. And this is to get reactions on the board's proposed objectives approach. And so the question is, do you think the proposed objectives-based approach will provide an effective basis for identifying material information that needs to be included in management commentary? And here we have three answers. Yes, the disclosure objectives provide clarity around investor information needs. No, the disclosure objectives are not specific enough. Or no, having a required list of information would have been easier. So if we can have that poll, please. Starting to get some votes coming in. I'll give it a little bit longer for you. Great. So there we have, pleasing to say overall, I think most of those of you who have participated in the poll think the disclosure objectives provide that clarity around information needs. Some, a number of you feel that they could be more specific in terms of helping preparers understand those needs. And then we've had one vote for no, a required list of information would have been easier. And I think really we are trying to get preparers, companies to focus on the objectives and for them to bring, I guess, entity-specific materiality to bear in terms of actually complying with those objectives. So we also have a little bit of time now for some questions, and we've had a few more questions come in. And so there's a question in terms of the content. And so the content area sounds very relevant for a narrative report, but is this also intended to help with corporate governance reporting around remuneration reporting? Do you envisage that the proposal will be helpful in preparing corporate governance reports? What's your thoughts there, Matt?
Oh yeah, that's a question that's come up quite a lot, and one that was debated quite extensively because in most countries a corporate governance report is a separate document to a management commentary. So what is important is that the information in a management commentary is coherent with that document. It's very likely that a management commentary will be picking up on the same issues that a governance report picks up, but the job of the exposure draft is not to replace governance reporting. Now, I think you mentioned the example of remuneration reporting, which is a really good one, where actually, if you look at the examples of information that might be required to meet the disclosure objectives, you'll see that where metrics are provided and where those metrics link to management's remuneration setting, then there is a requirement in there for management to explain what that link is. So I would say that management commentary is not a governance report, but as the exposure draft was being developed, the board was very much aware of the links between the two.
Great, Matt. And just to reaffirm what I said earlier, the slides from this session will be available on the management commentary project page on the IFRS website. Another question, Matt. We have content area for risks, but not opportunities. Sometimes people often see those as being nicely paired, but we've not gone down that approach here.
No, we haven't. And again, that's another question that we thought long and hard about. But where you will see opportunities being picked up explicitly is within strategy. And of course, the reason for that is that an opportunity is only really an opportunity for the business if management has a strategy to pursue it. So absolutely, risks and opportunities are equally important in a management commentary, but the information needs about them is slightly different. So you'll see them. You'll see that there's information requirements structured slightly differently. Great,
Matt. Okay, let's move on to the rest of the board's proposals. And Helena, can you run us through the board's proposals in terms of selecting and presenting information to be included in management commentary? Helena, are you with us? We seem to have lost Helena at the moment. Matt, would you mind picking up on this section?
I would be happy to. And Helena, if you get your connection back, do please jump in. So, yeah, let me start with the board's proposed requirements that would apply to all information in management commentary. And these are the requirements for information in management commentary to possess the attributes of useful information. Now, the top 6 attributes listed on this slide, just as materiality, are likely to be familiar to listeners, though in some cases we've used simplified terminology from what has been used in the conceptual framework. So these 6 attributes are based on our conceptual framework and would also apply to information in financial statements. But we recognise that not all preparers of a management commentary may have read the conceptual framework, so we've sought to use simpler language here where that's appropriate. And the requirements and guidance on the attributes in the exposure draft are designed to address the practical challenges that we heard arise when providing information in a management commentary. So, for example, earlier we talked about a current gap in reporting practice where investors tell us that management commentaries tend to focus on positive news. So the board's proposed requirements and guidance for ensuring that the information in a management commentary is balanced. They would apply to management commentary as a whole, so that all key matters, whether they can affect the company positively or negatively, are discussed. Also, information about each matter within the management commentary would need to be balanced. In addition to the attributes based on the conceptual framework, the board proposed an attribute specific to information in a management commentary, and you might have heard that mentioned a few times already, coherence. Management commentary is designed to accompany the company's financial statements. So at a basic level, coherence requires that information in the management commentary is presented in a way that allows investors to relate it back to the company's financial statements and other corporate reports, such as the governance report. But coherence also requires that information provided within a management commentary should be coherent. So, for example, if a key external factor is identified, coherence would require that the information about the company's business model should enable readers to understand the parts of the business model that are exposed to that factors. The company would also need to explain how management is responding to that factor. So let's take the example of a company that is exposed to an emerging competitive threat. So that's something that might have been identified in the discussion of the company's external environment. Coherence would require that the business model description provides information so that readers can assess the scale of the part of the business that is exposed to that competitive threat. And coherence would also require management to talk about its strategy for managing that threat. So coherence plays a really important role in assuring that a management commentary does not leave the reader with unanswered questions.
Thanks, Matt. And we've had a question around balancing good and bad news, and I think you've addressed that in this section here. And I guess coherence ties that in. It's kind of, it's a fail-safe mechanism, sometimes known as the connectivity and building linkages as well, I guess.
Yeah, if I may, I might come back to that that question of balance, because again, it's one of those questions that came up a lot. And the requirement for management commentary to provide a balanced perspective does not mean that management should not be talking about its aspirations. Strategy by its very nature is aspirational. So what the requirements and guidance on balance do is explain how to talk about your aspirations in a way that is also balanced. So, for example, if you're talking about something that's aspirational, balance would require you to talk about the factors that might cause you not to achieve those aspirations, as well as what you're hoping to achieve.
No, that's great, Matt. So I was hoping we had Helena back with us, but she seems to have disappeared again, unfortunately. So Matt, can you press on and talk about metrics as well? Do you mind?
That would be my pleasure, Nick. Thank you.
Actually, have we got Helena? Hold on. How do we have Helena? I think she's.
I
Helena,
hope I'm back.
You are back. Helena, can you pick up with metrics?
Metrics. Yes, of course. So some of you who were watching closely the slides on relationship between areas of content may have picked up that we don't have a separate area of content for metrics. And this is because the board wanted to emphasize that information about each of our areas of content is likely to include metrics. So metrics may be needed to understand the potential implications of key matters, and they may also be needed to understand the progress management is making in managing those matters. So the metrics each company would include in management commentary will depend on their particular circumstances. And they would be company specific, and they would be based on those used by management to run the business. The exposure draft provides examples of metrics that may need to be included in management commentary, but it does not provide a prescribed list of metrics to be included by everyone. So on this slide, we show how metrics may be used in discussing the company's business model. And just to pick up a couple of examples, for example, metrics may be needed to understand the scale of the company's operations. For example, those affected by a key matter, such as a key risk. Metrics may also be needed on the company's inputs, for example, to understand the company's exposure to long-term commodity price trends. Metrics may also be needed to understand the company's environmental impacts. For example, the volume of water abstracted by a key water-stressed site whose operation is under threat. Or they might be needed to understand the company's exposure to environmental matters. So, for example, example, to indicate the proportion of the business that might be curtailed by new environmental regulations. So there is a variety of metrics that may need to be provided. We also heard from investors that there can be particular challenges with the use of metrics in management commentaries. So our proposals include specific requirements over the clarity, accuracy, comparability, and coherence of metrics. And just to give you an example, if a metric relates to just one category of customers, that metric would need to be labeled and described in a way that clearly identifies its scope. So that's it on metrics. And I think the last topic we'd like to cover today is examples of material information. And these are intended to help preparers identify information that would be material in the company's circumstances. So they relate to each specific disclosure objective. And examples for all areas of content are provided in a separate chapter, which is chapter 15 of the exposure draft. It is important to emphasize here that examples are intended to help management apply its own judgment. So they are not intended to be used as a checklist. However, they can provide a basis for challenge and a tool for assessing compliance. And just to illustrate how the examples are intended to work, let's take one example from the resources and relationships area of content. So one objective for this area of content is to enable investors and creditors to understand progress in managing the company's key resources and relationships. And our guidance highlights that material information about progress might include a description of the actions management has taken to develop the resource and relationship, and also an explanation of the effects of those actions, supported by metrics used to monitor the effectiveness of management's actions. So when looking at this, a digital content business might determine that its subscribers are a key relationship and that its subscriber additions metrics is important for understanding the progress management is making. So it will be reporting this information in management commentary. Equally, water utility may identify its regulatory relationship as key. So it may need to report, for example, on how well it is meeting the quality of service requirements set by the industry regulator. So hopefully this shows that the ultimate aim here is for management commentary to provide company-specific information, including metrics based on those management uses internally. So with this, I think we have covered the main aspects of the board proposals. So just a couple of words on the next steps. So we hope that this overview would encourage you to look at the board proposals in more detail. And of course, we'd like to hear your views. The deadline for comments is 23rd November 2021. And with this, over to you, Nick.
Thanks, Helena. And we hope that overview will encourage all of you on the call to look at the board's proposals in more detail. And of course, we'd very much like to hear your views, as Helena said. So we have one last polling questions before we go to the Q&A section, and that is, what is your initial impression of the proposals? And the answers here are, they give companies too much flexibility in deciding what information to include. They strike the right balance between enforceability of the requirements and flexibility in telling the company's unique story. They impose too many requirements on preparers is another alternative, or you're yet to form a view on the proposals. So if we could have your votes on that final question, that would be appreciated. Let me give you just a little bit more time to gather your thoughts and tell us what you think. Okay, so we have a fairly mixed view here. Some of you still wanting to look into proposals in greater depth and form an opinion. Around about a third saying that this strikes the right balance between enforceability of the requirements and flexibility for the companies to tell their story. But a few also saying it gives companies too much flexibility. But very few saying that this imposes too many requirements on preparers. But thank you for those thoughts. Now let's go to the Q&A, and we have a couple of questions really, which are I'm going to pose to you, Helena, which are around the attributes. And so one is, why is the relevance of information not included? And then a different question on attributes, but related. So some of the attributes are the same as those in the that we identify in the conceptual framework for financial reporting, such as verifiability and comparability, but others are not present, such as timeliness and understandability. So perhaps you could just address both of those issues and remind our listeners how we got there.
Sure. So with relevance, the relevance of information we think is included. And the reason that the word itself is not used, is that management commentary is a company-specific report. So we went for the company-specific aspects of relevance, which is materiality, which is the same concept which focuses on meeting investors and creditors' information needs. So in that, by including materiality, and we included quite a lot of guidance on materiality to make preparers' lives easier. So we think we do capture relevance, the concept in our proposals. As for the other qualitative characteristics, the only characteristics we did not include is timeliness. And the board thought that the information, the nature of information in management commentary is such that it can be useful even if that report is issued a bit later. It can still have confirmatory value. Investors and creditors can still find useful information in that report. As for understandability, it is there, but it has a different name. We thought that it would be better to explain what the substance of that characteristic is. So in the exposure draft, it is called clarity and conciseness. But the meaning, the substance of understandability in the conceptual framework is there in the exposure draft.
Thanks, Helena. I think the rationale for sometimes using different names is the reality that those who'll be picking up the practice statement to put it into action are not necessarily from the accounting profession and will not necessarily be familiar with our own conceptual framework for financial reporting. So trying to make the practice statement more accessible to the users of the statement. So Matt, I have a question here for you. Lots of jurisdictions have their own regulatory requirements to report similar information, perhaps in less detail. How can we motivate individual entities to pick up management commentary in addition to the regulatory requirements they already have?
A very important question for our outreach, Nick. And I think the answer there is to go back to Yelena's comments earlier, that management commentary has been designed, the exposure draft has been designed to be attractive to local regulators as something that they could mandate or adopt in part to address gaps in their current practice. So I think a really important aspect of our outreach at the moment is engagement with local regulators who perhaps own a management commentary equivalent type framework. And what we've learnt from doing this project is that many countries have innovations in their frameworks, but no country has all of the innovations and all of the answers. So I think the consolidation that the board has been able to do with this project with best practice requirements is really helpful. But then, of course, yes, there are going to be companies who are looking for tools, reporting frameworks to meet very broadly specified regulatory requirements. For example, in some countries, there's a requirement to describe your business model, but no instruction as to what that description needs to do. So that's the other line where I think this exposure draft can contribute.
Thanks, Matt. So I'm going to take one final question, which is a nice summing up question. So thank you to the submitter. And perhaps I'll let both of you have a go at this, but starting with Helena, what are the key changes in this version of the management commentary practice statement compared to the existing 2010 statement? Helena, why don't you start?
Yeah, I'll start, and then I'm sure Matt will have something to add. So starting from the sort of content in the management commentary, although the content areas and what is captured is roughly the same, what we did in this version is to make more emphasis on resources and relationships and on the external environment that affects the business. So they are now separate areas of content. On the other hand, metric used to be a content area. What we did, we put those requirements separately and made sure that it's understandable that they apply to all areas of content, so that when you talk about your business model, you need to provide metrics. When you talk about your strategy, you need to think whether metrics should be provided there. So that is one important point. In terms of the requirement themselves, we think that the most important change is probably the introduction of disclosure objectives. And we hope that they would help both sides. As we said, we want preparers to use them so that it is easier for them to identify useful information. We also think that the other side, the regulators, the auditors, would find them helpful because they do give structured list of requirements, and it's much easier to understand what is useful to users. I think the guidance on attributes is important, whereas the previous framework would just require you to be balanced and to provide complete information. Here we provide much more guidance. We explain how this can be achieved. So yes, and from another important aspect, I think, is talking about long-term prospect, ESG, intangibles separately. We understand that this is important information to users, and we wanted to make sure people see that management commentary is a place where you can include that information.
Brilliant. So actually quite meaningful change from the 2010 statement. Matt, anything else to add on this?
Well, I'll be very brief because I think Elaine's covered most things. Metrics, long-term focus, those things are all much stronger in this exposure draft. But just in overall terms, I think it goes back to the concerns some of the people were flagging in the polling about flexibility, and the board has really sought to strike the right balance on flexibility with this exposure draft. So it's designed very carefully to enable companies to tell their story, but whilst still making it clear when they have done a good job of preparing a management commentary, when they have met the requirements. So there's much more detail in this exposure draft designed to support that, whether it's in the disclosure objectives or whether it's in the examples of information that needs to be provided in Chapter 15.
Great, Matt, thank you. So with that, I would like to thank Helena and to thank Matt for their contribution this morning. Most of all, I'd like to thank you, the audience, for being with us and for your participation today. Finally, to encourage you to please share your views with us. Those are very important in terms of how we continue to develop and finesse these proposals. And with that, I wish you well for the rest of your day. Thank you.